Hey all, welcome to ShareTreck. This is the 26th of May 2022 and let's get started with our daily update. CRISPR-edited hamsters exhibit unexpected social behavior changes. That's my first headline for today. And this is to be looked at both in a positive way as well as in a negative way, because what has happened in this particular experiment is that the scientists have been able to modify genes that produce certain hormones, and in this particular case they boosted a hormone that increases the aggressiveness in hamsters, and those hamsters became very aggressive. And what this means is that if we were to map behavior traits with hormones and then genes with those hormones, then it's possible to change the behavior of a hamster to be either very friendly, to be aggressive, to be horny, or whatever. So what this means is that if this study is continued in the proper progression, the regular trajectory, it will end up with the ability of modifying human genome to change human behavior. It's good in a way because then you can reform criminals and be sure that they have been properly rehabilitated and you don't have to incarcerate them. However, the worst part would be if it was misused and people were made docile. So that's something for a conspiracy theory and for your imagination. So think about it and put in the comments what you think might happen. The next CRISPR news item I have is that scientists have been able to modify the starch ratio in potatoes. As a person whose hobby is cooking, I find this very interesting because waxy potatoes are used in a particular kind of cuisine and cooking, whereas flaky potatoes are used in yet another. So this shows a great deal of promise because we can reliably have the appropriate potato for the right dishes. So this is a welcome change. This could also probably save some money for restaurants. Yeah, it's a nice development. Apart from that, you would have noticed that yesterday the markets did pick up very well despite the morning and pre-market signals were all bearish. The reason seems to be that the Fed minutes are clearly showing that there's a consensus among Fed governors that 50 basis point hikes going forward is sufficient. So that puts to bed any speculation about a 75 basis point hike, and the market in response did a relief rally. How long will the relief rally be in place is anybody's question. But I have a few more news articles which validates our theory of a couple of quarters of consolidation and then pick up in the fourth quarter. I'll talk about that going forward. But suffice to say that that was the reason why the markets rallied a bit. Ruble has been a matter of concern for the Russian government because they already knew that they were going to invade Ukraine, and they already knew that they need to have a good deal of reserves. So what Russia had done was it had increased the interest rates to almost 14%, which is unthinkable in a Western advanced economy. But that's what they had done to encourage savings. And now what has happened is they have a need to boost the economy. So they slashed down the interest rate by 3% to 11%, with the expectation that that's going to boost demand within the economy and give a jump. My personal opinion is that this is probably going to make Bitcoin jump a little bit more, and they may have to do a little more cutting off the interest rates in order to boost anything in the economy, given that they are in a war environment with sanctions against them, and oil is not going to be exported in the quantities that it used to be because of the European embargo that is progressively clicking in, with an aim to be fully in place by the end of 6 months or maybe another 5 months. So that said, I would like to also talk about the fact that there is another article that has come out which talks about 3 factors that need to be in place for a bear market to happen, for a bear market to go away and bullishness to return. And I'm going to show you that article and then we'll come back and discuss further. So here's the article, and this is in businessinsider.com. And the heading reads, Wall Street thinks the only thing that will save the stock market is a Fed pause, but 3 things will need to happen first for the central bank to stop tightening. So if you look at what are those three things, it says that it needs to see lower gas prices, inflation, and GDP growth. So those are the three things that it's looking for. So how will you get lower gas prices? You get lower gas prices when the Russia-Ukraine conflict is sorted out. How will you get low inflation? You get low inflation when your supply chain issues are sorted and your gas and oil prices go down and the labor shortage goes down. And how do you get lower GDP growth? You will get a lower GDP growth when the economy cools down. So for all of this to happen, it's definitely in line with what we have been talking about in our theory. So this more or less confirms that our identification of factors that will lead to a bull market is correct. It's a question of the time frame. We are talking about 2 quarters, that is the second quarter and the third quarter being consolidation, and the fourth quarter being the place where the market will start to turn around and become bullish. So we need some more confirmation from other sources for the fourth quarter being the better one for the market. We'll wait and watch for when we can get it. And now on a lighter note, I'm going to talk to you about a funny story that I heard here. So those of you who are in North America know raccoons. They are a delightful pest. They look very beautiful and cute, but they are very destructive and very intelligent, and they scavenge a lot. So there is this news article, raccoon gets stuck head first in California home's roof. So it really cracked me up. So they had to call the wildlife people to come and rescue the raccoon. I don't know how it managed to do that. It is actually broken through the roof. So there are 3 layers out there in a North American roof. One is the shingle, which is the uppermost, which is what you're seeing up here. These are all called shingles. And below the shingles, there will be a 3x4 inch board. And below the board there will be insulation. So there is a whole lot of stuff that the raccoon has to break through. So I don't know how this happened. This is, and you can also see the shingle that has been torn out here, one of the shingles. So it was a very funny article. I thought I'll just throw it in there to brighten up your morning. So with that said, let's go and have a look at our Nasdaq and the indices. Okay, here we are. I'm looking at Nasdaq futures, and Nasdaq futures is up marginally at 0.23% positive, that is 24.25. And if we go and have a look at our indicators, I think I would first like to look at US oil. US oil is still consolidating around that level, but it has managed to break through our resistance of 111.22. So my friends, this is not a good news. It is being supported by the 9-day exponential moving average. So with the MACD being bullish but tending towards the signal line, but momentum pointing upwards, I think there could be a marginal increase in oil prices today, and this support is now going to act as a this resistance is now going to act as a support, and we might probably see the next few days oil hovering just around this line of support, but on the upper side, like it was hovering on the lower side. So I think it's some kind of a consolidation taking place in this level, looking for a direction. Again, if we go into a weekly time frame, what we should see is a kind of doji candles out here. Of course, it's not a perfect doji candle because there's very less wick on the top. But still some kind of decision making is taking place, and progressively people are inching towards increasing oil prices. But oil seems to be a risky deal because having risen so much, there's a good chance that it might fall, and you don't want to be holding the stock when it falls. So those who are invested in oil, you have to be very, very careful. You have to watch the market every minute to make sure you don't lose. Now let's look at put call ratio. Oh, wonderful. Put call ratio has gone into the bull side for a change. So really happy to see this. And this has happened because of the Fed minutes as well as the subsequent rally. But when the market opens today, I am expecting it to be close to 1. So we'll see when the market opens. Even though the MACD is bullish at this point of time and momentum is below average, we'll have to see where it ends at the end of the day. My bet is that it should be around somewhere close to 1 in a neutral position. Here we have the VIX. The VIX for 26 May is down. It's below the 9-day and the 20-day exponential moving average. That's a very good point. and 50-day exponential moving average is giving us support, and we also have support at 27.20. We are heading in the right direction. MACD is away from the signal line in a bullish manner, and momentum has fallen below average, so the VIX looks really good. This is the result of what happened yesterday. The sentiments may change during the day, so whenever there is a steep rally or a fast rally or a relief rally, it's always followed by a sell-off. Because people feel that the rally won't last and they want to book profits. So expect at some part of the day the market to turn around and go down. But at this point of time, VIX looks great. But I suppose that by the end of the day, we'll have a bigger candle and probably end up close to where we were yesterday at the start of the market. Now that said, let us look at our 10-year US Treasury yields. Again, this is a doji candle, exactly like yesterday. The bond markets are still trying to guess what is going to happen. There is indecision out there, so we don't have any leads. We are at the same level as of yesterday. Let us look at the 2-year. Again, similar thing. There's a red doji candle. Again, indecision, so we'll have to wait for the market to open. So we don't have many clues where it's going to go. But typically, whenever we have had relief rallies, it has been followed by a sell-off. How much sell-off is going to happen is very difficult to predict, but whoever has got profit is likely to book some profits today, and that's how the past has been, and potentially that's how future behavior may also be. Now let's look at QQQ, and QQQ shows a positive open. It has a gain of 0.42%, that's $1.23, and we are breaking past this red line of resistance, so I'm going to mark it as a support. We still have a 9-day exponential moving average converging along with this red horizontal line of resistance at 292.96, and together they are going to provide a formidable opposition. Given the fact that our MACD is bullish, it's very encouraging. However, momentum is below average, but the encouraging fact is that it's picking up sharply. So anything can happen today. Whenever momentum is above average, I'm very, very positive in saying that the market is going to pick up and momentum is going to influence the MACD and take it across the signal line. But in this case, it's a bit unreliable because momentum is below average. So there's a possibility that may go up, but it's not a guarantee. Now, next, let us look at S&P 500. S&P 500 also shows growth of 0.73% in pre-market trades, so it's gone up by 0.75% now as we speak. That is $2.97, and we are still range bound within these two ranges that we spoke about yesterday. The upper range being 405.55 and the lower range being 389.67. And we have a MACD which is turned bullish, but momentum again is below average but picking up. So if the momentum continues to pick up and goes above average, we can have assured upward movement in price. But since we are below average in momentum, it could go either way, but the trend is upwards. But later on in the day, it can come down. So that's how I would frame it. And with that said, let me go back to QQQ and zoom out and take a look at the bigger picture. So if you look at the bigger picture, we have come back to levels that we had seen as of 3rd September 2020, or maybe even 24th August 2020. So that's a really steep fall. Volumes are also very, very healthy. They're above average volumes. So I suppose we are still struggling around the bottom. If we look at weekly chart, let us see if it can show some patterns for us. If I look at the weekly chart, again, I don't see anything new out here. Let us go to the 1-minute chart and go into a 5-day time frame and see what it looks like. So in a 5-day time frame, we can definitely see we are in some kind of a minor bullish trajectory, I would say. Let us put it this way. So this seems to be a bullish track that we are on. And if that is the case, and if the market falls down today, the bottom is going to be somewhere around 289.79. And if the market goes up, its next resistance is the 20-day exponential moving average, which sits at 291.36, and the 9-day exponential moving average, which sits at 291.59, which is this yellow line. And after that, it's going to be 292.96. And as you can see, the pre-market is already at 292.96. It's sitting exactly at the resistance. So we are most likely to break above this and make this into a support. And given the fact that we are in a bullish channel here, I feel comfortable to say that at least the open is going to be positive, and what happens after that is anybody's guess. Now, next, let us look at S&P 500 in the same time frame. S&P 500 is also showing us a bullish line. So I'm feeling comfortable, but you'll realize that even though we are on a bullish track, we are higher above, so there's a good chance that we can fall down. We can hit this 50-day exponential moving average at 396.31, and we can also hit this diagonal line of support at around 395.32. So that's entirely possible. Right now, pre-market, we are at 400. So if I was to show you the level at which we are, it's going to be here. So there's a good possibility that we may go up because we are on a bullish channel, and the floor is always going to be this diagonal line. And I'm going to move this up further, and I'm going to put it out here. And yeah, so if you want to see these charts, you could probably go into TradingView. I have made this public. These charts are public, so you can always go into this chart and have a look at it. That's where we are today. There's a very good prospect that the day will be positive, but given the fact that we had a relief rally, maybe we'll have the relief rally for a couple of days and then do a sell-off, or maybe do a sell-off at the end of the day or on Friday. I do not know. We'll have to see what happens with the market. But overall, a positive open is very possible. It's also possible that we may have a positive day today, and it's possible that we may have giving up of profits by the end of the day, or maybe on Friday, because Friday people want to be risk averse. So just that's my opinion on where the market is heading. Now let's look at our Genomic shares. I have sorted them out on the basis of the winners on the top and the losers at the bottom. There are only two losers yesterday. That was Novartis and PACB. They were down marginally. I don't think it's a very big drop for PACB. It was just down 2 cents, and Novartis was just down 68 cents. Whereas we have DNA, which gained the most, and it was at 11.63. And Allogene, I thought would be on somewhere around the top, but it's not. It's still in the bottom. So I was wrong with my prediction out there. But overall, it's a very, very encouraging sight out here. I'm just going to look at the pre-market action. The pre-market action shows a slight drop for DNA, increase for CRISPR, and there is no trades for IMTX. There is a flat open for Teladoc. Intelia has got a 3.22% gain in pre-market trades. Bluebird doesn't have any pre-market trades. ArcG has no pre-market trades. Editas no pre-market trades. Beam has got pre-market trade but opened flat. Verve has no pre-market trade. Illumina no pre-market trade. Vertex no pre-market trade. Regeneron no pre-market trade. iDNA. Okay, I want to look at iDNA. Yesterday again we still remain range bound between this red line out here and the green line of support out here, and we have this diagonal line of support which has helped us for the long time, and it's going to be at 27.79 today. So if iDNA did fall, there is support for it at 27.79 and also at 26.54. So that's what I have here for iDNA. The chart shows that MACD is positive and bullish, but momentum is still below average, so it's unpredictable, but it's moving in the right direction. So that could be a little bit of positive for genomic stocks today. But Friday, I suppose, is going to be a risk-off kind of environment where people would not like to leave money on the market for Saturday and Sunday. Anything could happen because of the Ukraine-Russia conflict. So I expect that either this evening or by Friday, the markets will have to turn back again because none of the other risks are closed. So that's the logical conclusion. And with that said, I would like to bring this session to an end, and I'll see you again tomorrow. So if you like this video, do press a like. And as I mentioned earlier, we are almost close to 500 subscribers. There's an open invitation to our early subscribers and active subscribers and any subscriber in general. If you'd like to participate in the special video that I'm making, just get in touch with me on ShareTreck@gmail.com, and I will send you a bunch of questions. You can answer any of the questions that you like in video format and send it back to me. I'm going to stitch them all together and do a special video for the 500 subscription limit milestone. So as soon as we hit 500 subscribers, I'm intending to put out the video. And time is running out because I need some time to create that video and edit and put it all together. And today we are already on 492 subscribers. So I would encourage you to send your emails to me at least the latest by today in another 3 or 4 hours, so that you can record and send back your videos to me for the collation. Thanks and have a great day. Bye for now.